The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We're going to take a look at the DAX like we usually do. We'll start out by looking at the daily that we've already posted, and then we'll switch over right now to the weekly to let you see that we're up here against the same top that we made back in March, and June, and you'll notice here that we did make a new high by early this morning in the DAX. It sold off a little bit since that time, but I don't know if that really means very much at all. We'll take a look here at the intraday chart. You'll be able to get an idea of some of the patterns that are lining up here, and you'll be able to see what the DAX is doing. We're higher here in stocks again this morning. I'll go over the stocks first, but a little bit later. But I wanted to talk about the gold market. Friday we had a very interesting day in the gold market, and I want to take my hat off and salute Mr. Z, John Chaney from the Tiger Den, as he called that bottom in the gold at 1262. It was a absolute spot-on 61% retracement on the weekly chart. Let's just take a quick look at it right here. Then we'll go down to a smaller time frame. I was looking for the market to get down to around the 1245 level based on that 4-hour ABCD pattern that was there. But in fact, what it really did was stop right at, I just absolutely missed that 61% retracement in gold. I saw it intraday, of course, because we had a really nice, three drive to a bottom there, and I believed that we were going to get a rally, and we've certainly had a pretty good rally. And already, we're already above those old highs that we made back on the 4th. We took those out. And I believe that we're going to get up somewhere during this run. We've already rallied more than $20-some off the bottom, so that means that $34 would most likely be the next area that you would be looking at. Let me just show you what I was watching here. In fact, we had posted this earlier in the morning. This was before the bottom was hit. This was just a little bit afterwards. You'll notice that the ABCD that I was looking for came down to that 1245 level, but you can see the three drive pattern that we had that was a 1.618 expansion, and then we've had this really good rally. Now, if we take a look at this rally just a little bit closer, and the reason I'm watching this, folks, is because silver hit a spot-on 61% retracement on the weekly. I mean, I'll show you the chart in just a second. And then also platinum did the same thing, and then the real kicker that I think solidified this bottom was what happened in the XAU. But let's get back to this gold we're going to be looking at right now. Here's where we are on the 60-minute chart on gold from last night. We're watching for this market to possibly to get up here to this 1297 level. That would be a 1.618 expansion of the move from the 4th of October down into the 7th. And it would also be a perfect 61% retracement of the high from the 24th. That would be the logical one. But what I think is going to happen before then is you're going to get a little bit of a pullback here, probably a 382 pullback, around $7 or $8 to get you to the area where it'll bounce back up to 1294. Now, once we get above 1300, if we do, then you're going to be looking at something that's going to get really exciting. So you really want to try to find a spot here to get long the gold and silver. Regarding that XAU that I mentioned, I'll just bring this up and let you take a look at it. This was the one that really surprised me when I updated my stuff on Saturday morning. If I'd have saw this intraday, I would have, I don't know what I would have done. Anyway, you'll notice that we had that 61 and 50% retracement, but look how the market exploded in the XAU, and that was with gold going down. And that's a very powerful sign. That's pretty big buying in there, and it was done on pretty good volume. So that's another thing that's telling us where we are. I remember last week we had Norm Winsky on the 5th of October, and he told us that this first week in this first few days of first 10 days of October are the strongest cycles for the whole quarter. As I recall, that's what he said, or something of that nature. And so that's going to be really interesting to see if some of these things are all coming together, at the same time. We'll try to cover the currencies, a little bit later in the show, but I only do one thing at a time first, and let's just move on to the silver market, and let's just take a look at this, because this was one that was just here's another one, hit the exact number, the exact 61% retracement there at 1630, and now we've had a pretty good rally of about 70 cents so far. In that's telling you that bottom is in, at least it's what it looks like. So we'll see what's going to happen. Anyway, we'll watch this as we watch this. We'll take a look at the platinum too, because I think that's another one that looks important. Platinum has one other interesting parameter that we watch, and that is the cycle format. And we watch these nominal cycles, and we have that 50-day cycle in platinum, and it went right down to went a buck or two below the 78% retracement and closed on there, and then it's stronger today. So that's one that looks really interesting from the standpoint of they're saying that the volatility in the VIX is the lowest in history, folks. My work doesn't say that. I'm looking at the VIX, and I don't think we've got there yet. Maybe I'm wrong, but I've checked it 3 times, and that's not what mine is saying. And I don't know. I'll put that up here to let you take a look at it, but I hate to get off on a different tangent here, but this is as where we were on Friday, and then we'll take a look at it and we'll see. It still doesn't show that. You'll see that low was in July, and I don't know if that's going to mean anything or not. It's close, that's for sure. It's probably going to make new lows today. We'll have to wait and see, really what it does. But I think that gold and silver, pay attention. I'm not so much involved in the silver. I'm not involved in silver at all. But the gold, you really want to watch that for a pullback. Now, look at it this way, folks. We went from 1262 to 1287. That's $25, correct? So if we have $25, we know that the 61% retracement on that is going to be 15, so the difference between that would be $10, would be the 382. So look for about a $10 retracement from the high that we made up here at around 1286. So look at around around 1277 or 1275, 1276, somewhere in that ballpark. Watch that level very, very closely in gold, because if that stops it, that means you're going to have another $17 or $25 run to the upside, and that's going to take it above 1,300. So that would be a good risk-reward ratio for just just for technical purposes. We'll watch this over the next day or two to see if that is in fact going to happen. So we'll look at that as we go through these. We're going to take a little break here. We'll come back. We're going to cover the foreign exchange markets, of course, and then we also want to cover some of the stock market. We want to talk about Bitcoin. We'll be right back. 877-927-6648.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, we're going to go back in time now to 2009, and this is the chart for the that I had for the newsletter coming in on that day, which was March the 9th. If you look very, very closely at the very bottom there where the ABCD is completing, you'll see the little double bottom. The first bottom was on the 5th of March, and we came down and tested it again on the 9th. Did not make a new low, and then, of course, from that level, we took off and we went up for 10 years, and we're still going up. But this is the inverted Bradley model. And it was following relatively well, pretty much since the start of 2008. And so what we're going to do now is to take a look at what we're watching now, because here again we're looking at the inverted model, but the stocks are going straight up into this area here. Now we're a couple days past that key Bradley date of the 4th or 5th, so that doesn't mean that much because it's within a few days when you're looking at something that is long term as this is. So we should be up in an area where the market should be topping, but maybe it's different this time. Deja vu all over again, as Yogi Berra would have said. But we keep an eye on that. We also know that the greed index is as high as it's ever been. The VIX is as low as it's ever been. So we'll take a look at this greed index. Hit 95 last week, folks. It's never been that high in the greed index. And the reason why I believe this is important is because when you're measuring fear and greed is much more difficult to gauge than fear is. Fear is much easier because there's all kinds of physical characteristics that you have with fear. We've talked about these before. You get a rapid heartbeat, you get a dryness of mouth, you get dilated pupils. It's just white knuckles. You just get all kinds of things where your body actually does these things. With greed, you have euphoria, and it's not the same thing, and that's why I think we get some bubbles forming. But anyway, that's what we're watching here with this. History is going to go back and look and say, yeah, you were right, but you're only 10 months off. I don't know when it's going to happen. In 2000, when we had the dot-com bubble, we topped in January in the Dow. We didn't top until March 24th. In the Nasdaq, when we just was a little bit under 5,000, and then it gave back 85% of it. You're right, Cam. Greed, for a lack of a better word, is good, from Gordon Gekko of Wall Street, the movie by Oliver Stone. Anyway, let's get back to these markets here. But we'll keep a close eye on it to see what's going to happen. We've also talked about the fact that the buy-sell indicators, the sell programs and stuff, are certainly in an area where they've also been relatively showing some type of greed, overbought situation in stocks, but neither here nor there. Now, we've made new highs now in the Dow Jones. Stop the presses, boys and girls. 1 second here. Let's just get up the one for the. I want to get up and show you that this is the Nasdaq Composite, showing you the large ABCD that is forming as we speak here. 1 second, we'll get this up here to take a look at it. The others you've seen before. I don't want to bore you with all the other charts that we put here over the day or two. I try to keep it a little bit new each day, which is a little difficult when you're doing 5 hours a week over the same stuff, so it's a little tough. Anyway, you want to watch it. We got a lot of these patterns that are completing. We got the Bradley model in here. We got the fear index. We got the cycles. A lot of stuff is telling us things are going to happen. Now, I've had a request to talk just a little bit about Bitcoin, which I know nothing about, but I do understand charts, and we'll put this Bitcoin chart up. It trades like it were Amazon or Apple. I mean, it really trades nicely as far as the numbers. You'll notice that we made that bottom way down here at 3,000 a couple weeks ago. We had a rally that didn't quite make the 60% level of the high. It made 60% of the high from the earlier part of the month. Then we came down. We hit the same number on the downside, and now we've completed an ABCD pattern up here at 4,600 in Bitcoin. So, and this is a really nice pattern because if you look at it, you'll see the beautiful ABCD structure that lines up right at the 78% level. So this is the key here, because if we can't get Bitcoin above this 4,700 level, it's due to make a pretty substantial correction. So that's I think that's important. The other thing that's important here on a charting basis, if you look to the left of the chart, the far left, where the high was made up there at 4,600, if you look closely, you can see a perfect ABCD pattern over a 2-week period that lined up exactly to the high at $5,000. So this is going to be an interesting one to watch. Don't trade it. Don't want to trade it. If we do have any people interested, what I could do is we could get Mark Leibowitz from Volume Reversal. He specializes in Bitcoin and all of the different trading vehicles that they have for it, and we could have him back on the air because he certainly knows the intricacies of Bitcoin trading. But it's got a lot of people talking about it, and I don't know if it's a bubble or not. You have one side with Jamie Dimon's group says it's a bubble. You got other people that's saying, it's not a bubble, and you got me saying I have no idea what it is. Now, I wanted to share one other thing with you. Since it's baseball season, this is a real interesting chart we get from Robert Prechter's social economic letter that he does. But what he's doing is he's showing the relationship between baseball, home runs, and the stock market. If you'll notice here, the top line that you see is the Dow Jones Industrial Average. And then if you'll see the middle one, that is the number of times that the batters are trying to hit home runs. And then if you'll notice the red line, it is the average home runs that we're having. You can see this goes back to 1865, folks. So this is a really, really high correlation. And as you can see, there's a great deal of correlation here between home run hitting and the market. So no, correlation isn't causation. You're absolutely right. It is just correlated. That's all it means. Doesn't mean it's being caused by anything. I agree with that. All I'm doing is I want to show you the fact that there appears to be a relationship between home run hitting and what the stock market is doing. That could be, totally irrelated and just happens to be a coincidence. But the fact that it looks that way is the same. I happen to be a very strong baseball fan from my days at Drexel when we had so many friends that played for the Dodgers, and it was a lot of fun. But anyway, what we're really looking at, we have a question here on wheat. The wheat looks okay. If you'll just give me a second here, I can bring up the wheat here. It doesn't take very long here using the old charting package here. Hold on a second here, and there we go. Get this up here so you can take a quick look at it. And there you go. This is the wheat should hold this 440 level. We've been down as low as 437, I believe, so it needs to hold that level. The others have done that. The corn and the beans, all of them have done that. So it needs to hold that. And of course, if it doesn't, that means we're getting ready to go. Now we've got a we have a crop report on the 12th. That's going to be a really big one. We'll be right back. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, I've posted a chart of HAO. That is a Chinese ETF. I guess it's related to the market, but you can see there's some nice patterns that are here. Especially we're forming a Gartley up here, just a tad above the 61% retracement. Someone's asked a question about these lines that are on here. Folks, these are lines that were developed by Ensign Software. They call them Pesavento Patterns. All I asked them to do was if we could measure each swing so that I could check, which swings were repeating and also what the ratios of those swings were. Now, the problem with the program is that it's super sensitive. If you notice, we go out to the 100th decimal point, and for trading purposes, a tenth is easy, but a 100th is ridiculous because you can't expect to get the exact high or low. What it does do is it shows the accuracy of the ratio. So that's the main thing to try to find out what you're doing. But that's what it is. It comes with Ensign software. There's other people have this also. MetaTrader 4. They were my students many years ago. The Russian guys that started it. That goes back 20 years ago, and they also built that into MetaTrader 4. And it's available there. But remember, you have to be able to see where the swings come from and how they line up. Because if the theory of pattern recognition is 1 second on the bonds, Mr. Z, I'll answer that in just a second. But the theory behind pattern recognition is what happens in the past will happen in the future, because the markets do nothing more than repeat over and over again. That's all that they ever do. So that's primarily what we're looking at. Regarding the bonds, we hit that perfect bottom at 151 on Friday. And the bonds are actually trading. The electronic bonds are trading today, even though the bond market is closed. So I think it's important that we keep that in mind, because it's interesting to see that is what is going on. And I don't believe I did this. I can't believe I did. Well, I didn't do it. I'll be darned. I actually forgot bonds in the newsletter. Can you believe that? Boy, there's a sign the old gray matter is slipping away. Oh, my gosh, I really didn't. I don't have the bonds. I'll be darned. Anyway, we know what that 151 level, that was a spot on, bottom, 61% retracement and expansion. What I would be watching for in the bonds is a very slight rally. Interest rates really look like they want to go higher, folks. They certainly do. There's just no other way around it. If you look at the charts, whether it's notes or bonds, it's just truly amazing that they don't line up. So at least for bullishness, they look really bearish, and they have for over a year and a half. They topped a year and a half ago, and yet the market is still making some slow. Interest rates are relatively cheap because of what the Fed is doing with quantitative easing, and that distorts the market. But that's not going to stay forever. At least it shouldn't. That's what they say, but who knows? All right, let's take a quick look here at the Nasdaq this morning. That's been the leader of the pack. It's made new highs. We've made new highs in the Dow Jones E-mini this morning, and I believe we also did it in the S&P. And we'll put this up here. You'll be able to see that we have a interesting ABCD pattern at a 1.27 expansion up there at the 60-80 level in the spot December Nasdaq. So we'll watch that very closely. Someone's asked a question: can gold rally with rates rising? Oh yes. If you'll remember, back in 1976 through we started trading gold in 1972. It came out at $105 an ounce, as I recall. In 1976, it was trading in the 220, 230 area. That's when I first went to work for Drexel Burnham, and interest rates in 1976 went from about 4% to 13% in T-bills. So the gold can go up a lot. Believe me, that it really is. It can easily do it, folks. When you're looking at these intermarket relationships, boy, I have a really difficult time looking at some of these things. I try to keep this as simple as possible. If you'll just look at the chart that you're trading, let's just take gold, for instance. Just look at the gold chart, and just what we went through here gives us a high correlation. Now, let's don't use the word correlation. A high probability that gold has made a major bottom there at 1262, that being the 61% retracement. That's been, it's really good. Let's see, Larry happened. Real time since the stock market. Hey, no, 1837. No, I started trading in 1835, right after I had met Andrew Jackson. That's when I first started. When the very first Fed came out, I was at the very first Fed meeting. That was called it was called the U.S. Bank, folks. It wasn't even called the Federal Reserve. It was called the U.S. Bank. Same ideas, but that's neither here nor there. Okay, let's move on here to some of these other things that we want to cover. We've covered the Nasdaq and okay, hold on just a second here. I've just been around a long time. That's all there. I think I told you that I talked to John Hill last week. He's 91, still trading actively, as are his kids. And he was telling me how much he enjoyed the book that I wrote about Trade with DC that I wrote with Leslie. Anyway, let's just get on to this other one that we wanted to talk about here, and that is the foreign exchange markets. Folks, you know, we talk a lot about Fibonacci here. I just want to show you something just for educational purposes. Okay, let's just take a look at it, because it's a really good idea if you want to determine what the trend is. Just take a look here at this is the Canadian dollar. It's a 4-hour chart going back well over a month. And, it's exactly a month. And you'll notice that each of the lows on the Canadian dollar chart, on this 4-hour chart, each of those lows, every single one of them was a Fibonacci retracement. It started at 78%. Then you had a 61% retracement. You had a 61% retracement. You had a 61% retracement. You had a 382 retracement, a 61 and a 61. And now you're coming down to this 2480 level in the Canadian dollar. And if you get below 2450, the trend is going to change. And if you notice, the high that it made on Friday was a perfect 78% retracement of the high that was made in August. So just look at these, because this can be very helpful for determining, you know, what the trend is. If you look at that line, you know, it's not a straight line like a regular trend line. It's more of a parabolic line, but it's based on what the Fibonacci numbers are actually doing. Now, do all charts look like this? No, but they're very similar. And bull markets are easier than bear markets, and the reason for that is bear markets are faster, because fear is a greater emotion than greed. You know, so that's that's basically what you want to be watching. So keep an eye on it. It's going to be very, very interesting here to see some of these unfold, but we'll see what's going on. Oh, some of you have asked how my burro Walter is doing. Walter is set out there. He's out there in the lower quarter pasture, and he's got the water and the vino hooked up on his saddlebags, and we're ready to ride off. We want to talk just a second here about we'll come back. We want to talk about gasoline futures because of these hurricanes. We'll be right back. 877-927-6648.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how EverBank can help keep your money thriving just the way you want. Is growing your money a priority? EverBank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? EverBank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. EverBank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. EverBank is a member FDIC and equal housing lender.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, we're back, folks, and our friend Steve Rhodes, who is one of our contributors here at TFNN, put a really nice notice here in the room that on Friday we had a P-index date. That's the Pesavento Index. Let me explain to you what that is. When we first started looking at these cycles, one of the things that Dr. Miller had an idea about was if there were so many cycles hitting on one day, maybe that would turn the markets, or if there were very few cycles hitting on that day, that could also turn the market. So what we did is we produced a bell-shaped curve, where we had standard deviations going out 2 standard deviations to 95%. So if you had 14 or more aspects on a day, that would be a 95% chance. And if you had 4 or less aspects, that would also be a 95% chance. And so we plotted this, and then we lined these up with the historical days in the market. We basically did this for the stock market, the Dow Jones Industrial Average, in that it had a tremendously high correlation. One of the best traders that I ever met, and I met Amos Hofstadter, who was one of the, well, he was certainly one of the best, but frankly the very best trader that I ever met thus far, and I'm sure it's still outstanding, was Frank Tauscher of the Super Traders Almanac. Frank was in Tulsa, Oklahoma. They used to have these contests that you entered with, play money, but he would always enter with his own $100,000, and he won every single one of them, and he surpassed everybody by 300%. You just couldn't beat him. And Frank told me, and he actually put it in his book, The Super Traders Almanac, that he thought it was the P-index was the single best timing thing that he had ever found. Now, because they've changed the Astro books from what we originally started with, and because they put in these asteroids and stuff, it distorts it a little bit. But Steve goes back to the original way that we did it, and we had a P-index day of 15 on Friday. So that's going to be an interesting one to look at. So we'll watch it very, very closely. Anyway, that's what we're keeping an eye on this morning, so we'll watch it a little bit. Now, I wanted to talk a little bit about the gasoline futures. I don't know if the chart posted I don't think it did. Let's just post it again to make sure that we get it up here, and then we'll be okay. Here we go. Just want to show you the relationship between these. You talk about news and stuff. You'll notice back in where we had that big spike, that was the very first hurricane, Hurricane Harvey. Then we had the second hurricane, I believe that was Hurricane, I don't remember the name, Irma. And now we had the third one, which is Nate. So you can see that these things, they get distorted. Now, the gasoline futures are now setting right near a 78% retracement of that whole move. So this is something that you might want to might want to look at. So just keep going, and we'll be able. Steve, we really do want to thank you for this and all the stuff that you do, giving us all this good information, because it slipped my mind, and it is rather important. I think it's important. Okay. This is, over a 300-year period. That's even before I traded, We'll see what's going on. Okay, let's move on to talk a little bit more about these currencies, because we've had so many things happening with them that it's just absolutely amazing. Just look at this euro, folks. I wanted to show you the symmetry in the euro here. This is a weekly chart, and if we get this up here and just take a quick look at it, you'll notice those in the bottom there in early January, we had a bottom in February, we had a bottom in April. You'll notice those were absolutely perfectly symmetrical. And then look at the retracement that we just had in the euro from the 121 down to the 116 and change. That was also perfect. That's suggestive that we're probably getting ready to have a bounce in the euro. Not only that, but it stopped right near those old highs that we made, going all the way back to 2014 and 2015. So this is an important number at this 116.80 in the euro. That's just incredibly important. What we'd be looking for now is to see a potential rally, and then you would be able to see if the market is going to go lower. You can see this even clearer if you take a look at the British pound versus the U.S. dollar. We'll bring this up, let you take a look at it. You'll notice after we completed that 3 drive to a top pattern up here at the 136 level, if you remember on the weekly chart, that was just a tad above the 50% level. Yesterday, the low that we made on Friday was exactly 61%. We've already rallied 150 pips off of that bottom. And so that's telling us that we're most probably going to get up and test this 134 level in the British pound, which would be an interesting spot, to take a look at it, because there's a potential now, if you look at this really closely, and remember, we're just assuming that the rally is going to be 61% retracement. Maybe it's going to take 4 or 5 days and not get there, but the fact that it's moved 150 points in 2 days tells you that something's there. But there's also the possibility, if you look at that high from early August, which was the B point of the ABCD, that could also be setting up for a potential head and shoulders pattern. So you really want to watch that level very, very closely in the British pound, and that level happens to be at 133. And we're trading at 131 and change now. So watch that 133 level, because there is the thing that's going to be interesting to watch, if nothing else. We've only got a little bit of time left, and there's one market that really deserves our attention, and that is the crude oil market. Let's just take a quick look at where we are right now. We need to look at it in several different ways here. It's because it's very similar to the gold. You'll notice that on the crude oil we have a potential for that 20-man line that acts like a fulcrum that hits it, and the market bounces off of that level. Especially you're looking at a 382 retracement of the low from August 28th, which was our solar eclipse. That comes in at around 48.60. We're trading about a little less than $1 a barrel higher than that right now. And then we also have a 382 retracement off of the whole low going way back into June, when we were down at around $42 a barrel. So this is a really critical level here in the crude oil that we're watching very, very closely. And hold on one second, and we will see what's going on here. We want to look at the heating oil, because that's another one that looks really interesting, because the heating oil, just get this up here so we can take a quick look at it. You see the heating oil is doing the same thing. We've had an equal correction, just like we did during July and August. That has completed on Friday. So far the market is holding above that, but there's also the possibility in that heating oil, and this is only a possibility, and I'm going to try to make this very concise, but this is what I was looking at in the gold. I was looking at that larger ABCD pattern, and that slightly lower low in the heating oil you might only get that. So watch heating oil, because if it doesn't break, it means that 382 level is still very, very valid, and all it did was to take out those lows of early October and on Friday, and if it doesn't weaken, that's telling you this market could have legs. So pay attention to this crude oil. We've got gold and crude oil in the crosshairs for today, tomorrow, along with some of the currencies and the stocks. So a lot of things are happening, which is pretty much what our good friend Norm Winsky at Astro said was going to happen, and also Bill Meridian. 877-927-6648.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and the old clock on the wall says we only have a little bit more time left. The two charts that look the most interesting to me from the Nasdaq is the long-term chart of Amazon, the greatest stock in the world. And as you can see, we've completed some major ABCD patterns in this particular stock. And then also, if we take a look at Apple, Apple has completed on the long-term yearly charts 2 major 1.618 expansions that were absolutely perfect. The second one ending at 165. We get above 165, it's probably going to go a lot higher. But these stocks look relatively bearish to me on a longer term and shorter term basis. Whether that have anything to do with the Nasdaq or not, I'm not sure. But these stocks do have a very bearish pattern, and we're running up to some pretty strong resistance at this 156 level in the Apple. So anything above 158 in this would say that this is not going to work, and it's probably going to go a lot over and again. So we'll see. And one of the greatest quotes in sports, folks, is Wayne Gretzky, and he says, "You lose 100% of the goals you don't take, of the shots you don't take on gold," and that's absolutely the case. This business is based on errors. You make a lot of mistakes, and you got to correct the mistakes, but then you're going to get some of them right and some of them wrong, and the more you do it, you'll do more rights than you do wrong, and that's when you turn the corner. So don't ever worry about it. You just don't worry about the things. You're like Michael Jordan, he missed 9,000 shots in his career. Look how many times that Babe Ruth struck out. He struck out 9 times for every home run he hit. But so that's what it's all about, folks. Just remember that fear is nothing more than false evidence appearing real, because 90% of your fears will never be redone. So we're going to take a break here till tomorrow. Live every day in an attitude of gratitude, and may God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, Nasdaq, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.